Hey, so, there's a thing about YouTube. If you don't have any haters, then you're really not doing a good job. And most of my haters have faded away. I guess it's because that they've realized the truth, or they've basically have nothing left to say, because the guy that was begging me to give him ideas on the YouTube videos, I guess the Square and the Sale and the Yext and the ICPT was good enough for you, so you got nothing left to say, and you've made some money. But I welcome you back. I need more insults. But we had a new guy, and he commented on the idea that we had gone 17 for 17 so far this earnings reporting season on the earnings reversals that have worked, and I was saying how there was even more that I didn't even do. And he said anybody that claims to go 17 for 17 is a bunch of horse shit. So again, I said, why don't you come to the room? It's free. It's been free since the second week in July to come hang out with me and my guys. And there's no other way to disprove anything I'm saying here than sit there, listen to me talk. Hey guys, this stock's right now breaking the VWAP over the opening range. You might want to get involved here at 27.20. Oh, the stock's at 27.50. There's our 30 cents. Let's take profits right now. So if I was to say, all right, guys, the stock's breaking over the VWAP and going green. This is an earnings reversal, the trade that works pretty much every time at 27.20 here. Let's buy it. Oh man, it's not working. Oh shit, let's punch out here at 27 and take this 20-cent loss. And that's how it would work. So that's basically what we do. That's basically all we do. And then we take some of the day trading profits and we put it back into the sale and some of our swing trades, because again, Gail, if you're still out there, if you don't know the story of Gail, she was a member. She signed up for 3 months. She took a class of ours, and then we gave her 3 months for a certain amount of money that she paid. And she found it to be, at her words, criminally irresponsible and negligent for me to reiterate the idea that the chances are the market won't go down today. Now, Gail, it's been 3 years since you've come into the chat room, and pretty much the market hasn't gone down. And pretty much the market does rebound at one point during the day, even on the bad days. And the one down day that we sell off into the close every 6 months when that happens, ooh, you're right. You were right. The market didn't go up that day. We can't go up every single day. And in theory, we haven't gone up this year. But if you haven't witnessed, since the sell-off, there's been 3 great rallies, and then this last one that we're in right now, which we're about to break out of. Now, I want to make something perfectly clear. The market has gone nowhere. The market, when I say the market, it's generally the Dow. I trade the diamonds. I'm like the only one that trades the diamonds. The diamonds in the S&P. The NASDAQ has broken out, and obviously we've hit a wall lately, and we're isolating. But let's stick to the Dow, the market. When people say the market, it's usually the Dow Jones. Dow Jones has not gone anywhere for the entire year of 2018. But this is one of the greatest trading years of all time, because we found the underlying technology strength, the IPOs, the Chinese stocks at the beginning of the year, the Chinese stocks as a short over the last couple of months. Again, every trade is independent. You're going to find a monster trade on Monday, I'm sure. You're going to find a couple of losers on Monday. I'm sure the market's going to do whatever it does. But let's talk about the market. Anybody who's talking about this market, bull market, being old or in the 9th inning or the 8th inning. First of all, the inning thing is a bunch of bullshit. You ever gone to a baseball game and they go into extra innings? How do you know this game ain't going into extra innings? Maybe it's a double fucking header. Maybe it's one of those games where you play 16 to 17 innings. And how long is an inning anyway? But here's what I'm trying to say. In 2015, the market kind of sucked. You remember in 2012 when the market sold off? I think it was 2011 from May to something. We almost had a bear market that nobody even talks about. The market has been going up, 2009 or whatever. March 2009 is called the bottom. And we rallied. And then 2011, I think it was 2011, 2012. I forgot. I can look at the chart. I'm not going to do it. We had a market that went down 18, 19%. So there was another bear market in the midst of this bull market. So if you think about it, the market's only been rallying since the lows of 2011. So is it a big deal that we've gone up 7 straight years? Absolutely not. The big deal would be if this market lasts an entire decade without a recession or a significant drawdown in the market where we have a really, really bad year. Usually we don't go a decade, meaning the 80s, 90s, thousands. 50s, 60s, whatever. We've gone pretty long in bull markets before. If you think about it, 87 to 2000 was 13 years. That was pretty good. From the crash of 87 till the crash of 2000, that was pretty sick. What I think is going to happen now is that if we do come out of this range, we have now just begun, oh man, cue the music, another bull market. So if we come out of this range and we break out with some volume and then we come back to test the top of the range and hold it, we have now begun what I think is another new bull market. So we did that in 2015, and I made the video where I said I think we just started another bull market, which should carry us to Dow 20,000, which it did. And we got that rally. Then if you think about it, the Trump moment in time where we sold off considerably and everybody got spooked, that trapped enough people that we lifted off. And let me tell you about these sell-offs that we have based on, and again, I got a list and I'm writing a song about it. It's funny, and if I get around to it, I'll do it because I don't have a lot of time. So, you know, in June of 2017, I started concocting this list because I wanted to make a song about it. We have to add a lot to it. But every time there's been a sell-off, there's a name for it, right? Of course, CNBC does a special about it. You know, market in turmoil. They have to, you know, come on a Sunday at midnight to make us that much more afraid. And those have been great buying opportunities. Suffice it to say, every sell-off's been a great buying opportunity so far. So we've had the China slowdown, the fiscal cliff, the debt ceiling, the taper tantrum, interest rates rising, the Fed minutes, the jobs reports, the volatility index. It's overbought, the RSI, the shooting star, the hanging man, the death cross, the Hindenburg omen, which is my favorite. Then you had all the countries that were going out of business, Greece, Portugal, Spain, Puerto Rico. Then you had the Russians invading Crimea, Russians invading this company, Russians invading that place, Russians doing this, Russians doing that. And of course there was the diseases, bird flu, SARS, N1R1, and of course the coveted most important disease of all time, Ebola. We were all going to die. The travel industry was going to shut down. The airlines were shutting down. Everything was shutting down. And there was going to be an Ebola cloud going around the world, killing us all, just like the Fukushima nuclear cloud that was going to go around the world, poison the waters, and we were all going to die. All right, so we got the N1R1 Ebola. And then the government's shutting down, of course, every 6 or 7 months. Government shut down. Of course, Brexit. Brexit was a highlight. We mentioned the Trump, the European recession, the Chinese recession. Then you had the inflation, stagflation, deflation debate, which one of the inflations was going to kill us. Inflations. Then you had the Greenspan, Bernanke, Yellen, all the different transitions of Fed policy that was going to destroy the market. Then you had the missile testing on Iran. Oil prices were crashing. Now oil prices are going too high. The weak GDP, the too strong GDP, the weakening dollar, the too strong dollar. Political uncertainty, flash crashes, the corrections, everything's overvalued. Central banks are printing too much money. The debt to GDP, QE infinity. All right, so, and here we are, a market that just doesn't want to go down. Will it go down? Will it be a black swan event? See, the idea of a black swan event is that you don't know what's going to cause the market to go down. That's going to be the one that makes the market go down. Whether it really be Godzilla or Cloverfield or some catastrophe, you don't know when it's going to happen. But we've had those also. Remember the tsunamis? Yeah, tsunamis in Taiwan. We're going to end the semiconductor industry, and the chips were all going to fail, and all the people that needed chips to supply their computers and all their specific doodads, we were all going to crash. Nobody was going to buy anything, and that was going to be the end of the world. Again, tsunami. That didn't lead to any type of market correction either. Now, a correction is different than a crash, a correction, a correction, a crash. Who cares? It doesn't matter, because when it does happen, guess what? As long as it's not a 2008 type of catastrophe where debt and money freezes and there's no transactions and we need to bail out another country like ourselves and maybe re-bail ourselves out, guess what? We made it through '08. What more can they throw at the market that we should be scared of? There's nothing left. There's nothing left. They just said capitalism was coming to an end. There was no money available for anything, but they crossed a couple of T's and dotted some I's, got some money from here, transferred it over to that account, transferred it back into this account and back into that account. Next thing you know, the market's going on a 16 to 17-year bull market, which is what I think is going to happen. Because if we break out now, because every one of those excuses that I gave you because the market was going to go down trapped people, okay? It's a death spiral. You always think about the death spiral down. It's a death spiral upwards. What happens is the shorts, and again, I'm speaking from experience because this is how I think. We're fucking morons, idiots, schmucks. We want to bet against the market because we want to be right. We want to be right. We want to laugh while other people are losing money. I know. It's how I feel. I love it. I love when the market goes down because I feel that every analyst and every shithead who's been right all this time about this bull market is going to get it wrong and they're going to lose their money and I'm going to be able to make money because all I got to do is press a couple of buttons, sell my positions, and start shorting stuff. Whereas all the guys, they'll be victims again, are the long-term believers. So when this thing does happen and the shithouse goes up in flames, I'll be laughing again. Now, hopefully it doesn't happen overnight. But even if it happens overnight, how much can my stocks be down? If I own a stock at $27, is it going to open up at 0? No. If it's opening up down 20%, what am I out? $6 on my $20 on my $27 stock? If I got 2,000 shares of Yext, right? Oh, and it opens up down 20% tomorrow. Am I going to be upset? Sure. Is it going to be the end of the world? No. Because first of all, it'll probably bounce. Or I could just hit the button and get rid of it and short it if it keeps on going down. Nothing adversely can happen as long as your majority of your money is, I'm still liquid. I mean, real estate is one thing, but as far as the market's concerned, I don't have enough money dedicated to the stock market to make a dent if it does crash tomorrow. But you know what? In my day trading account, I'll just press the other side of the keyboard and I'll probably offset what I'm losing in my stocks that I own. But anyway, you've got all these reasons for the market to go down. And you got all these gold idiots and silver idiots. Do you understand that trade never worked? To run to precious metals because you think the economy is failing, to run to precious metals because you think the stock market's failing. Do you know? Go look at the charts. When did gold take off? After the fact. The market was crashing. We were in turmoil. Gold wasn't doing shit. It wasn't until later on till it became a fad. And everybody wanted to be a part of gold. That's why gold's never coming back. It's never going back to 2,000. It's never going to 5,000. No matter what, unless you can eat it. When you can eat gold, then maybe it'll be back to 2,000 or 5,000. And if I'm wrong about that, guess what? It doesn't matter. I'm not going to buy it. I still own my gold, my couple ounces of gold that I have from 385, so I'm the greatest investor in the world, right? I own gold from 1985. What's up? I own silver at $8. I'm better than all of you. You guys got no clue. You're buying silver and gold at 1,800, thinking it's going to 5,000. Yeah, good for you. Good for you. But the trade, the idea that the market's going to crash and gold's going to skyrocket is completely wrong. It doesn't work. Hasn't worked like that in, I don't know, since the 30s, the 40s, the 50s. I don't even know. But it definitely doesn't work. Look at gold when the market gets weak. Does it rally? No. So what are you looking at? But going back to the shorting opportunities, right? Every time, and again, in 2017, I tried picking tops on that market, trying to shorten the market, got hammered. Day trading was not good in 2017. Owning Alibaba, Square, the Qs and the Diamonds, that was the whole year. That was the whole year. Tried to short the market, got to be 6 different times, got smoked every time. And that's what I'm here to tell you. Because all of these names and all those different reasons that the market's going to go down, the shorters who might have just got out of their shorts reload twice as hard. So then when it doesn't go down, they have to cover twice as much. And the bulls who never gave up start buying more, so the market's got 3 reasons now to go up. You got the shorts that are covering twice as hard, and the bongs are getting excited. And you got people who are buying the stocks that are just breaking out on the backs of the broken souls of the shorts and the dead corpses left on the side of the road as they're trying to figure out, how can this market keep going up? I don't understand. It's been 8 years. How come it can't keep it up? It has to go down. No, it doesn't have to. Nothing has to. Don't ask why. Don't try to analyze this market. Nothing has to do anything. Like some guys telling me about the debt ratio in Yext. I don't give a fuck about the debt ratio. The stock sat around for 18 months and just broke 15. So right there, it's a new stock. I don't care that it was at 10. The 10 to 15 that it went up 50%, that's old news. Now that it broke 15 and 17, 15 and 20 and it's consolidating in 20, it's a brand new stock. So I don't give a shit that this stock was sitting there at 17 bucks just a couple of months ago. Why can't it go to 50 now? Because it can. Because it doesn't make any sense. It's not supposed to make any sense. That's why it's the stock market. It's all a big Ponzi scheme that is rigged and manipulated. So if the guys that own Yext, the guys, that control that company and that stock. If they want it to go to 50, it's going to 50, no matter what fundamental analysis that you could possibly do, and your debt ratio and the burn rate and whatever the fuck you think you know because you took accounting doesn't mean shit. Because take a look at DDD for a second, all right? Here's a company that should be worth nothing, right? In theory, they make no money. Why do they have any value? Then you got companies that are blasting. You got companies that are churning out billions of dollars of profit, and the stock goes nowhere. Disney, killing it. What did that stock do when they reported numbers? They're making so much money. But DDD, they say, oh, we lost $75 trillion less than we thought we were going to lose. Stock goes up 100%. So again, you're not going to ever make too much sense out of it. That's why technical analysis will always be better than fundamental analysis, because you're trading on what's actually happening, not what you think's going to happen, not what the company does. And of course, if you like Apple and you own other products like I do and you want to own stock in it, you feel good about it. What about when you didn't feel good about it? Remember when the growth story in Apple was over? Yeah, how'd that work out for the shorts? So anyway, what I'm trying to say is I've got something that's working pretty well. If you could sit here and stare at the screen and only do those things, you're going to do all right. But that's where the hard part lies. Taking the losses when it doesn't work, like a WTW or an Etsy. Taking the losses when you're short something and it goes against you, like the diamonds, the S&P, and the Qs the other day. You can't stay short in a market that perpetually goes up, no matter what you think. And here's the problem. The shorts, they won't give up on the first move up. They think, it's just a squeeze. Just a squeeze. I'll just add some here. Again, remember, the shorts have unlimited amounts of money, apparently, because no one on the internet is losing any money shorting the market. Everyone's a genius, right? They have unlimited amount of money, unlimited funds, and unlimited time. And they could just keep borrowing more money and they never get margin calls, which is all bullshit. But there comes a point in reality where you have to cover because you're going to go broke. And you can't afford to keep adding and adding and adding. So you add once, you add twice, and if it keeps going up, guess what? You have to cover. Next thing you know, you're 10 or 15% higher. So if this market blasts off through all-time highs, what do you think? It's just going to pop and then drop back down and start crashing? It's probably going to break out and rally for another 6 to 7 years. So again, March 24th, 2024, I think the Dow's going to be at 40,000. I think of what it was. Really, the calculations, as far as I'm concerned, were about 43,658. But Dow 40,000 sounds a lot cooler, right? So if we're at Dow 40,000 on March 24th in 2024, who cares? I'll still have some diamonds, hopefully, but chances are I won't. Chances are I'll be in and out throughout the time, over the next 7 years. But I tell you something, if you're day trading in this market, put some money to work on some good stocks. And I'm not talking about Overstock and QD and Mark and INNT and some bullshit stock that had 2-day run. Look, if your stock's not rallying on a day when the Dow's up 350 points and the Nasdaq's up 100, sell it. If you're, well, again, your stock might be taking the day off. But if your stock goes 3 days in this market and doesn't have a green day, dump it. The fuck are you looking at? Who gives a shit? Go find something that actually goes up with the market at least. Dump your shitty ass stock. Buy something good. If you keep buying it every time it moves up and then 3 days later it's all the way back down to where it came from, your stock sucks. Overstock blows. I don't care if the shit stock goes to 90, but every time the stock tried to break out, it failed. And it doesn't just come back to the range, it breaks back down, proving that it's a sucker's bet. What do you got to look at? What do you want to see? How much proof do you need that your stock blows? But then you got a good stock like Sal and Yext that when they do sell off, they find support and then they rally back to where they came from within 2 or 3 days. Not continuing a downtrend. That's what a trend is. Overstock sucks. Get it through your fucking skull, you moron. All I hear is this thing is a juggernaut. What stock are you looking at? It was a fad. It was just like gold. The fad's over. Overstock's crashed. It's done. And if it does come back, good for you. But right now, everything, again, I don't know what's going to happen. But when everything's telling you one thing, why don't you just listen? Overstock's not good. Mark's not good. QD's not good. HTGM's not good. If you're sitting there hoping that some drug gets approved or something, what are you, a scientist? What do you know? You don't know shit. You're reading something on Yahoo Finance or a message board that somebody else told you, that told them that maybe the drug gets approved next week. And you're buying options on this thing, waiting for some approval and just losing money every week? Come on. Or just go into a trending stock. Or just trade earnings reversals for a living. Because like I said, soon I'm going to have a couple of kids back there. All they're going to be doing is trading these reversals. And yes, 17 for 17. Sorry, went 18 for 18 because I had a reversal on Friday on IQ. It wasn't an earnings reversal, but it was a 1 minute multi-day VWAP earnings reversal through a whole number. And those are the trades that work pretty much 80 to 90% of the time. And if you look what IQ did, it was the trade of the week. You never think that out of nowhere at 1 o'clock in the afternoon, you're going to have your best trade of the week. And there it was. Why am I pointing at a screen that's not even on? I don't know. Just for effect, I guess. So that's it. 20 minutes. I hope you watched the whole video. I've been getting a lot of requests to come hang out with us. The thing is, I don't want to let too many people in the room because I like to get to know everybody in there. So this week, I'm kind of taking a moment to myself. I'm going to call everybody. Everybody. Let's get to know each other. See what you want to do. And I really want to know for the guys that came to the room for an hour or 2 or 3 days and then you left. Because we got guys in my room that are retiring on some of these ideas. We got guys in the room that are making more money than they've ever made in their lives. And then you got the guy that came in for 2 hours. I don't see what's happening. Don't be the guy that doesn't come back. Call me. Let's talk. I'll explain. Maybe you came in there at 3 o'clock in the afternoon and there wasn't anything going on. But you're missing the point. Set yourself up for these range break VWAP reversal trades that I show you how to find. And if that's the only thing you do, you will be profitable. And guess what? To come and learn, it's free. To come and experience what we're doing, it's free. I do an options seminar now every Thursday night, which was generally members only. And come September, it's going to be members only again. But right now, come and witness what we're doing. We've done it 3 weeks in a row, and we've prepared for some monster trades the next day. Am I making $100,000 a day? Absolutely not. If I'm trading 400 shares of a $30 stock and it goes up 50 cents, guess what? I'm out, and I don't even trade for the rest of the day. I try to make my $200, $300 a day, and then I go back to what I do best, talking and helping people. So don't worry about what I'm doing, because I know you guys are all still bent on the idea, well, if I'm so smart, how come I'm not making $100,000 a day? You can't make $100,000 a day if you're not putting that kind of money up at risk, right? You can't turn a $1,000 option trade into $10,000 if you're only putting in 50 or 100 bucks, right? But if I turn a $50 option trade into $300, it's pretty gratifying. I love it. And yeah, I regret not putting 400 or 500 into the idea, but you know what? 50 bucks turning into 350, everybody can do that. And we find at least one of those, lately been 2 or 3 of them every Friday. So, all right, guys, I hope you had a great weekend. This is it. This is the moment. Get involved. These next 3 weeks, it's still on me. After Labor Day, we're going to do the 1 class, and then no more Thursday night free sessions unless you're a paid member. And again, if you've already taken your 30 or 40 days of freebies with me, you got to make a decision whether or not you want to stay. If you've taken only 2 or 3 days out of that month and a half, let me know. I'll give you another month on me, because that's the kind of guy I am. I want to disprove everything you know, all right? Because I'm not Tim Sykes or Jason Bond or the Warrior Trader or Melissa Armo. If they're so awesome, they would have taken my challenge already. Because listen, I've reached out to all of them. Nobody wants to do anything for free. I was like, listen, I got $1 million. Show me how to make money and I'll give you some of it. I'll give you half of the money. Nobody responds. Nobody responds to that. I don't understand. If you're so smart, show me what you do for a month. And if it's awesome, I will give you $10,000. No more trading contests. Just show me what you do and prove to me that it works over an extended period of time, a month, month and a half, 2 months. If you can prove it to me, I'll just give you money just because then you're a hell of a guy. And nobody wants to take my challenge. I don't get it. I guess they can't prove what they're saying in their videos on YouTube or in their DVDs or their books or their seminars. And guys, seriously, if you're going to Day Traders Expos and you're paying $600 for some asshole to talk about volatility trading, really, I mean, you're wasting your money. You're seriously wasting your money out there. You want to learn how to make money. The person that's going to teach you should at least be able to demonstrate what they do over an extended period of time for nothing. I don't want your credit card. I don't want $1 from you. I don't want nothing. I just want a phone call, get to know me, get to know you, get to know me, get to know you, and sit in the room and actually follow the rules. And then when you don't know a rule, ask, find out, learn. And then we set your charts up, and then you hang out with us for the rest of your life, and you're probably going to have a profitable trading career if you want to make it a career. Whether or not you think trading for an hour and a half or 2 hours a day is a career, it's the best career you could have. Because if you extrapolate the amount of time you're spending, because I don't know, Tim Sykes is always talking about how you got to study and how you got to prepare. You know what? I prepare for an hour on a Thursday. That's about it. Because I could walk in, and once you know what we're looking for, that's all the preparation you need. I don't give a fuck. I don't sit there crunching charts, reading books, knowing about the economy, fundamental analysis. None of that shit matters. Wait till I show you what I'm talking about, and you'll see it work single-handedly right before your very eyes, and there's nothing more to prove. All right.